He ran the most trusted investment firm on Wall Street. Everyone wanted in. Celebrities, billionaires, charities, you name it. His returns? Always perfect. Too perfect. Then, poof. December 2008, the magic trick ended. $64 billion vanished overnight. And behind those locked doors? Oh, you don't want to know. Because there was no money, no investments, just a paper fantasy. And the world's most expensive photocopier. And now, some of those early investors just got a court pass to keep billions they pulled out before it all crashed. Yes, even the ending has a twist. Today we're diving into the empire Bernie Madoff built and how it collapsed in spectacular fashion. We'll see how a man turned fake numbers into real billions. We'll walk through empty vaults, ignored warnings, and a trail of scams stretching back centuries. We'll meet the original fraudsters who inspired him. We'll even step into the twisted psychology that kept thousands hooked for decades. And yes, we'll ask the question investigators still can't answer. Where did all the money go? So buckle up, this isn't just finance, this is theater with a billion-dollar ticket price. December 11th, 2008. While the rest of Wall Street was reeling from the financial crisis, one of its crown jewels was about to implode. Wall Street had seen collapses before. The 1929 crash turned millionaires into street hawkers overnight. But Madoff's implosion? It wasn't about markets misbehaving, this was a man-made disaster in a tailored suit. Bernie Madoff sat in his Manhattan office calm as ever and told his sons, "It's all one big lie," they called the FBI. Oh yes, family loyalty, corporate edition. Within hours, Madoff was in custody. By nightfall, the news was global. $64 billion gone. Phones lit up in banks, charities, and private homes from Palm Beach to Paris. Some victims refused to believe it. Others broke down in tears. Reporters camped outside his building, hungry for quotes from anyone who'd ever shaken his hand. TV crews showed the same front door on loop, waiting for someone important to storm out. It was surreal, like the plot twist of a movie playing out in real time. This wasn't just another Wall Street crash, it was the end of a 20-year fairy tale, one where the happy ending came with handcuffs. Madoff's real genius? Selling boredom as brilliance. Month after month, his clients saw the same steady gains. No volatility, no big wins, no scary losses, just calm, tidy profits. It felt safe, reliable, almost dull, which made it irresistible to the ultra-wealthy. It's the same trick that Dutch tulip traders pulled in the 1630s, selling simple flowers at prices higher than houses. People convinced themselves it was safe because everyone was doing it. And then, the petals hit the floor. He wrapped it in prestige, former NASDAQ chairman, respected philanthropist, dinner guest to politicians. He didn't beg for clients, he turned them away. And when they finally got in, they felt chosen. Feeder funds funneled billions to him without asking questions. Private banks pitched him as a secret advantage for their best customers. Even fund managers who suspected something kept quiet. Why ruin the party? He wasn't just selling returns. He was selling identity. If you were in, you weren't just smart, you were special. And while they were bragging, he was laughing. When investigators finally cracked the books, they found nothing. Not a little less than expected. Nothing. No stocks, no bonds, no trades. The famous trading floor. A couple of guys entering fake trades into a closed computer system. Statements were forged, spreadsheets cooked, and trade confirmations printed on demand to match the lie. Reminds you of those ghost ships in the 18th century. Vessels that appeared grand and loaded from the dock, but inside, the cargo holds were empty. Madoff's portfolio was just another ship sailing on smoke. The vaults? Empty, unless you count dust as a financial instrument. Old records were shredded, digital logs wiped. Even the transaction histories were absurd, listing trades on days the markets were closed. It was a theater set, all facade, no foundation. Visitors saw computers, binders, phones, all props in a Broadway-level con. If you'd walked in expecting Wall Street's finest, you'd have found a glorified copy shop running on toner and Audacity. Not everyone bought the fairy tale. Harry Markopoulos, a financial analyst, spent years waving red flags the size of skyscrapers. He ran the math. Madoff's returns were statistically impossible. His report spelled it out. No legitimate strategy could deliver this. He even outlined the likely mechanics of the fraud, step by step. The warnings had the same fate as early notes about the Titanic's lack of lifeboats: spotted, acknowledged, and then politely ignored until the iceberg hit. He sent them to the SEC, over and over and over, and the SEC, they visited, they smiled, they left. Some officials didn't understand the math, others didn't want the headache. Internal emails later showed confusion, turf wars, and plain old indifference. So the scam rolled on, each new investor unknowingly feeding the beast. By the time anyone took Markopolis seriously, the vault was already empty, and $64 billion had evaporated like it was never there. Madoff didn't invent the con, he just perfected it. Charles Ponzi, 1920s, promised investors 50% profit in 45 days trading postal coupons. The man couldn't even deliver real stamps. When the scheme collapsed, people lined up outside his Boston office demanding their cash, and found only chaos. His name became the dictionary definition of financial fraud. Then there's Enron, 2001, a Wall Street darling hailed as the most innovative company in America. Behind the curtain, shell companies hiding billions in debt, fake trades, and accounting so creative it deserved an Oscar. When it fell, pensions vanished, and executives walked away rich. The South Sea Bubble, 1720, an exclusive investment in Britain's overseas trade. Investors bought in without knowing what the company even did. The 19th century railway manias in Britain and America promised fortunes from train lines that existed only on maps. Shareholders received glossy brochures for routes no one ever built. And the 1980s junk bond craze, risky debt dressed up in Armani suits. For a while, the returns seemed unstoppable. Then came the crash, the arrests, and the awkward "we were misled" speeches. Different centuries, same formula: promise the impossible, collect the cash, disappear before the curtain falls. Madoff just upgraded the costumes, tightened the script, and handed out VIP passes to billionaires. Numbers sold the dream, but psychology sealed the trap. Madoff's accounts were by referral only. Want in? Someone had to vouch for you. He targeted tight-knit communities, country clubs, religious networks, where trust was social currency. Once inside, you were part of the inner circle. Roman emperors used the same tactic: bread, circuses, and a sense of belonging to keep the public loyal. Madoff just replaced gladiators with golf memberships. People didn't just invest money, they invested pride. And pride is harder to give up than cash. Even when whispers of trouble spread, many defended him. Some even reinvested to prove the rumors wrong. They weren't defending Madoff, they were defending themselves from admitting they'd been conned. That's the real magic trick: make the victim your biggest supporter. Some of it's easy to trace: mansions in Palm Beach, yachts in the Mediterranean, closets full of luxury watches. Some went to pay earlier investors, the classic rob Peter to pay Paul shuffle. But billions vanished into a maze of shell companies and offshore havens. History's full of vanishing fortunes, like the Spanish treasure fleets sunk before they reached port, leaving entire empires scrambling. Madoff's missing billions? Same story, just without the cannon fire. Recovery teams have clawed back some, but a huge chunk is gone forever. Maybe it's hidden in accounts under false names? Maybe in assets no one's thought to check. We may never know the full truth. Even now, lawsuits are grinding through courts, chasing art collections, private jets, even safe deposit boxes. And while most victims got 94% of their money back by the end of 2024, billions still vanish, and some rich investors just got a legal pass to keep money they pulled out early. And yet, the biggest mystery remains: was it all just one man's greed, or was Madoff protecting someone else's fortune? Without answers, victims didn't just lose money, they lost closure. So, the vault was empty, but belief? Oh, it was overflowing. Madoff didn't just steal wealth, he stole trust, pride, and decades of security. And the world let him. Few days ago, a court ruled some investors can keep $6 billion they cashed out before the collapse, proving the final chapter of this story isn't about justice. It's about who gets to walk away smiling. If you want more unbelievable stories from history's darkest corners, like, subscribe, and ring that bell. History isn't finished. Stay curious.